I guess. Let me check. Okay, I'll turn it down a little bit. All right. How about that? Sounds good. Very nice. Hey, well, good morning, everybody. It is Monday, May 16th, 2016. It is 7:40 something, so a little bit delayed on the open. But really good to see you. Well, it's Monday, so I think we should look at the commitment of traders report. We should look at the calendar, and if we have time, we can do some technical analysis. Maybe look at some of the new pivots and look for swings. What do you stink? Smell like a plan? Let's clean up our workspace and get going. Hey, good morning, by the way. Good to see you. So, guten Morgen. Welcome to Forex.Today. Let me remind you that trading Forex is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. So please always stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hello, my name is Wayne. I'm the Chief FX Market Strategist for TradersWay.com. We do these sessions because we want you to be hugely successful. I'm here to educate and advise and share my experiences of trading Forex for well over a decade. How neat is that? So you can learn from my mistakes and also my triumphs. And maybe we can speed up the learning process from 5 or 6 or 7 years to only 3 or 4 years. Hey, nobody said it'd be easy. So anyways, we do these sessions every morning, 7:30 in the morning here at Forex.Today, Monday through Thursday, and every Friday at FX Street, where I am, Forex Speaker of the Year. Yeah, cool, right on. Appreciate that. Thank you for your loyalty. So I guess what should we do then? Play the happy music and get on with it? Let's do it. Yeah, short sleeves, yeah, totally. Gets hot in my office. In fact, I don't know if you can see this machine right here, right where my name is, but it's a second dedicated air conditioner. Yes, my house has air conditioning. In fact, it has 3 or 4 units outside. So it's a big house with a lot of air conditioning, but I still need this sucker. Just the screens get hot. It's the screens. It's not, I only have 2 PCs running this, but the screens get hot. Buzz says it's 48 degrees Celsius. That's ridiculous. Cairo scored the highest temperature in the world. Yeah. That's ridiculous. 48 Celsius. Man, even the Sudan is nicer than that. I think I'll head down to Darfur where it's comfortable. Yeah. All right. So anyways, let's get going. Yo. Boop. I'll move this over here. Let's take a look at the calendar. Hang on. Okay. Boom, 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 boom. Open this sucker up a little bit. Used to be a little bit taller. Used to be, oh, where did it go? There it is. Okay, let's filter this, eh? Let's take a look what's going on this week. 2 and 3 stars. You want to go crazy? Let's see how much that is. Is that a ton? Ooh, yeah, that's a ton. All right, so 3-star importance only, baby. Boom, snap. And yes, much more reasonable. Okay, let's see what we've been given here. Monetary policy meeting minutes. Yeah, these are good because we get to learn what Stevens is thinking. They may have also been discussing the new guy, right? The Governor Stevens is stepping down soon, isn't he? Yeah. So we could learn about that. We also know that, cutting interest rates and such, we want to know what they're thinking. Is there going to be another rate cut, for example? So to understand sort of the inside politics, you're going to have to read these meeting minutes, and they're important. What can I say? Um, I I'd venture to guess that amateurs wouldn't even read it, and almost by definition, that's what makes them an amateur. So if you want to be a professional one day, how about that? What does my book say? Fake it till you make it. Just act like a professional. And one day you'll forget you're faking it, and that's when you know you're a professional. Um, so if a pro would go through meeting minutes released by a central bank, then so should you. And if not, then by definition, you're an amateur, sucker. You're right. You're a liquidity event for a professional. So be a pro, right? Be a pro, yo. So that'll be important. CPI. Yeah, I guess this is going to be tiptoeing into more importance in the UK because you have to pick and choose your battles, right? And if the economy was crashing into the toilet, you'd probably be worried that other things than CPI because you would just assume there's no inflation. If you're in recovery mode, the big question is how well are we recovering? And then you're going to go back to inflationary indicators, right? Um, you know, so and then also imagine you were trying to calculate GDP, right? You could try to get the data yourself and have an outlook for GDP, right? So let's say you're an expert and they say, hey, will you come on CNBC and tell us what you think about the foreign exchange market? And you'll say, yeah, because I'm a pro. I just finished reading the Australian monetary policy meeting minutes. But if you want me to come in and talk about US dollar, yeah, I know a thing or two about that. And you can say, all right, so one of the things we follow in our GDP modeling, right, is, I guess now we're talking about UK. You could say, well, the thing that our models indicate for the UK, blah, 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 blah. And the way what we look at is government spending, right? Is government spending released to the public? It's called a budget. Okay. Now, the interesting thing about government spending is they tell you a year ahead. Now, what's the likelihood the government, along the point of the year, so they say, all right, here's the budget for 2017, but it's still 2016, right? So let's say we get to 2017 and we get into May, June, July, August, and they say, ooh, things have changed. Maybe we will spend less. What's the likelihood of that? The government passes a budget, and then they say, whoa, maybe we should cut back on our spending. Yeah, zero. That ain't gonna happen. If anything, they're gonna spend more, right? But but a budget's a budget. So you have that data. All right. What else goes into GDP? Import minus exports. Yeah, we usually do that at the end, right? Because that's almost a flow, right? That's a cash flow. Investment, okay, so we'll do I. What is investment? If G is government spending, so we can almost label this spending. What is investment? Are we talking about mutual funds? That was terrible. Give you a hint, it's spending. Who invests when they spend? When you buy a plasma TV and some $10 folding up beach chairs, are you investing? Yeah, businesses, when they spend money, they invest. Okay? So you have government spending, you have business investing represented by I. Okay? And now we're talking about consumer price index, and that's going to be C, consumer spending. Okay? And so when you're looking at CPI, you want to say, well, the more spending, the more, right? So let's say the higher the C, and then you're going to have to do little I for inflation, right? The higher the likelihood of inflation going up that way, right? Okay. Can you have higher I with less spending? Yeah, if you're Venezuela, 700% inflation this year in Venezuela, and their economy is heading the other way. Oh, well, that ain't supposed to happen, right? When the economy crashes, isn't inflation supposed to fall? Isn't that what the world is worried about? Inflation's down, right? Little I is down, right? So what's going on with Venezuela? So remember my theory I outlined a few weeks ago. I think you should let Venezuela crash. Sorry, Venezuelan population, but you could have changed your government a long time ago. All right, so that's going to crash. There's going to be no way out. They're going to default on all this debt and then move from a nationalized oil industry to a privatized oil industry based on international oil companies being allowed to come into Venezuela and invest. But just as that default happens, the currency is going to be worthless, the economy is going to be worthless, and real beachfront property is going to be worthless. And that's probably when you need to go in and start buying apartment buildings, huh? Because who's going to live in the apartment buildings when Exxon and Royal Dutch Shell and Total start doing offshore drilling? And all of a sudden, the value of property is going to skyrocket because of all the oil men coming in. So there's my thought on that. The risk is that American frackers, oh, and by the way, exports minus imports, frackers are going to make these large, long-term projects irrelevant for the next 20 years. So that's going to be the big risk if you look at that. So they say, Venezuela, why would we invest into Venezuelan oil when we can't get oil above $50 a barrel? And Venezuelan oil, by the way, is like tar. Viscous. Right? The viscosity is not advantageous. So why would you want thick tar oil when we can just frack it in the United States for cheap, right? Remember, I think fracking prices are going to come down, so blah, 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 blah. So, so going back to this, we have to look at things like, why is CPI important? Oops. Why is this important? in our calculations for GDP. So how's your modeling going for UK GDP? Well, you know, when are you going to do it? Remember, I modeled it a year and a half ago for you. Maybe not quite a year and a half, but well over a year. What, a year and 3 months ago? Okay. How about CPI? Do we care about inflation in the United States of America? Why do we care? Interest rates. Okay. Tell me if this is going to be higher than expected or lower than expected, and why. Quick. Just type it out. Just say high, dash, and a reason. High, why, or low, and why. Just proof. Just proof. Don't give me your opinion. Nobody cares. Oil prices, fine. Oil prices are higher, you got to spend more. But what you're really talking about is gasoline prices. Or prices per barrel, right, of oil are higher. Then that oil needs to be refined, and then it needs to be delivered, right, to the gasoline stations. And then what? You have to spend more for some gasoline. It used to be $1.80, now it's $2.20. Okay, great, that's good. Where does that data show up? Because you can say high oil, yes, which leads to higher gasoline costs. And where do we get that data? CPI, sorta. Yeah, what else? GDP? Yeah, okay. They're all indirectly, yes. There's going to be a direct impact. Let me give you a hint. If it costs more to fill up your gas tank, where does that data show? Consumer spending, yes. But what release? What news release? Inflation, yeah, we're getting there. We're getting there, but you're not going to get inflation until you get CPI going up. But CPI is going to go up if something else goes up. PCE, not bad. Thank you. Eddie Boy's got it. Retail sales. Retail sales. You got to spend more money at the gas pump. Right? How about swiping your credit card? I bet you anything you'll see there's going to be a spike in spending from the credit card data, you know. Find out how much Visa did this quarter, right? That kind of stuff. So, you know, oil was $26 a barrel 2 months ago. Now it's $50. Oil doubled. Not quite, you know, but close. It's up 85%. So we're going to see that in retail sales. And then retail sales, along with other things, goes into CPI. Because the CPI is a basket of like 200 things. You know, it's a lot, right? From the cost of a lawyer per hour to the cost of the lawyer's rent and the cost of his coffee. All right. So, anyways, retail sales last week, was it better than expected or less than expected? Better than expected. Why was it better? Now, you know, when we break it down to like trivial, elementary topics, right? How could you possibly be a retail analyst? This is what you do your whole entire life, is analyze consumer spending at the retail level, meaning cash registers. And gasoline prices have gone from $1.50 to $2.20 here in Georgia, which means in Canada they've gone, or for California, they've gone from $2.50 back to $3. How could you miss that? Do you think you're going to drive less? You're going to stop driving to work? You're like, I'm only going to go to work Mondays, Wednesdays, and Fridays now because, did you see gasoline prices? What percentage of the population is going to do that? So this is an issue of elasticity if you're an economist, right? Hey, dude, you need to go to work. I don't care if it's $10,000 a gallon. You better get your butt to work, right? So you're going to go to work. Now you might choose a different vehicle that gets better economy, but do you really care whether it's $1.50 or $2.20? You're going to stop driving to work because it's $5 more a gallon, or no, I mean a fill up costs you $5 more, and you have to fill up twice a month. So you're like, dang, I have to drop another $10 to go to work. Yeah, well, you make $14,000 a month. You pay for it, right? So but it's going to show up in retail. You get it? So how could you be how could you be an analyst and be shocked last month like, oh my gosh, did you see retail sales? But it's so hard to understand. People spent less money at Walmart and they spent less money at Macy's. I don't get it. You're like, dude, they spent it on gasoline, yo. Good job on that PhD. Looks like that was worth a lot, huh? So anyways, we're going to look at CPI. Oh yeah, building permits, do we really care about that? You know what's ridiculous though? Is that these like housing starts and building permits and stuff, we're looking at like 1 million, man. Holy smokes. 1 million houses. 1 million new houses? I thought we had a glut. So what is that going to mean? Where are the jobs going to come from? How many dudes does it take to build 1 million houses? It's going to take a few, right? Seriously, how many dudes does it take to build a house? Framers, foundation guys, lot prep guys, whatever you call them, right? Roofers and electricians and plumbers and drywall guys and painters and trimmers and floor guys and door guys and holy smokes. So it's a lot, right? So what do you think? Are we going to start to see that data in non-farm payrolls? Okay. You see how we need to string some of these things together? Okay. Okay, so anyways, so there's your CPI. Okay, so if consumer spending was a big number last week, so CPI eventually is going to get this. So either this month or next month, depending on when it gets added. Because if it was just released last week, it might not be included in this CPI. It might be next month, and then next month CPI, my gosh, is going to be a surprise. Holy smokes. We'll say, well, yeah, because it just included the retail sales that was released in May. Might be reported in June, so you have to double check that. But you might just say, well, yeah, don't you remember, like just 4 weeks ago we had retail sales and it was huge, and that number gets recorded in June CPI. So of course CPI is going to be high, and people will just be shocked. You're bummed. You just blew their mind. That's why it's good to be the smartest person in the room, don't you think? Okay. Japanese GDP. I doubt that this is going to be good. Any particular reason? Yeah, earthquakes don't help. Although you can get an increase in government spending and you can get an increase in consumer spending. And why is that? Because you need to rebuild. And what happens to the local currency? Let's just say you're an average Japanese household. You got some money. So let's say you're above average. You know, you're nothing special, but you don't live in slums, right? So you got some money. And interest rates have been zero for about 25 years. So you probably have a lot of money invested, you know, short, medium, and long term in offshore assets, right? US mutual funds, Australian bonds, so on and so forth, right? And all of a sudden your house is destroyed. You might need some cash, right? You've run into a liquidity problem. You can't eat your Australian bond. What do you do if suddenly you're cash hungry? Yeah, you bring some money home. Does the Japanese yen get strong or weak? Strong. And you know, you can also say, what about domestic investments? What happens to the Nikkei when there's a major earthquake? Does it go up or go down? Nikkei goes down, but at the same time, yen strengthens. There's an inverse relationship between the direction of the Nikkei and the direction of the Japanese yen. How nice. And now you can picture why. Like people are like, holy crap, I need some cash. Boop, boop, boop. Right? And that's it. It's all good. Wait, do we have is it FOMC meeting minutes this week? Is this just not on the calendar? Is it this week? Is it a brain fart? What is it taking out of here? No, it's not. I'm not the only one. I'm not the only one. Don't you need somebody? Don't you need no FOMC? Yeah. Wow. Well, it must have been there. It says it's a 3-star. Man, I must be off today. I feel so weird because I have no homework to do. I'm just right. Strange. It's a strange feeling. So my brain is like gone. So yeah, I must just, I look at it and I still didn't see it. All right, so let's go back. So anyways, GDP, everybody says it's going to be bad. So if it's bad, nobody cares. It's already been priced in, right? So what if it's not as bad because there was an increased spending in G, and an increased spending in I, and of course if your plant was damaged, so your Mitsubishi and the roof needs to be rebuilt, right? You got I, and then the consumers, you need to fix your car was damaged, a tree fell on top of your car, so now the consumer has to spend some money. And you know what? GDP could be a surprise on the upside, and everyone says, look how bad their economy is. Uh-huh. You just forgot to include the Japanese people, the citizens of Japan, in your model. So, you know what I mean? It could be interesting, right? me, 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 me. me, 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 me. All right, so you see what I mean? Just a little thought process is always nice to add into your analysis. Okay, you can see if that's important. FOMC meeting minutes is probably going to be dare I say, more important. Okay, and what are we asking? Is it June? Is it June? Is it June? Is it June? June? Right? Separadis, right? I'm saying it's probably December. Okay, so, right? There we go. And then what? Australia, right? Yeah, Aussie jobs report. I say it every time, but let me say it again. I haven't seen, but anything that has changed my thought process on this. Over the years, I tend to trade Aussie jobs report, and you get a big spike one way or the other. And then what does it do? It does this. So if you have an opportunity to get in and take profit, feel free to do it. Okay? Might be 50, might be 75, it might be 100, but this is a scalp, you walk away. Know when to hold 'em, know when to walk away, know when to run. Okay? So this is when you walk away or run. So this is going to be very, very, very nice. Good opportunity. I would recommend if if you like news event-driven strategies, then trade Asia that particular day. Okay, retail sales out of the UK. Yeah, you know what? We want to see a good one. Sure, why not? Last month was horrible. Okay. Maybe it'll be all right. Right? Maybe it'll be better. This year will be better than the last. Philly Fed on the manufacturing side, they thought it was a horrible number. Now they think it's going to be a good number, right? Last month horrible, this month good. You notice that's the theme, isn't it? When you look at the U.S. data being released, last month was horrible. Everybody thinks it'll be great this month. Very interesting. Weekly jobless claims, probably on trend. So when oil prices stabilize, now we're at 40 to 50 bucks a barrel, right? So maybe the energy industry stabilizes. Okay? Remember, if it wasn't for oil prices coming down and rigs and other things being shut down, like it's not here. I don't think it's on this report at all, but don't we have a rig count on Friday? Yeah, here it is, rig count. 406. Do you know what it used to be? These are oil rigs hanging out in the Gulf of Mexico. Does anybody know? Trying to see if we can get like a historical level. All right, so in 2015, 1,600. Yeah, isn't that nice? 1,600. So at some point, when this stabilizes, they'll at least not be laying people off, and that could prop up non-farm payroll numbers because it'll be less of a drag or no drag at all. And then at some point, they may wish to bring some of those rigs back online and hire people. And then imagine for every rig that comes online, how that will positively affect um, other industries. For example, how do you get someone? So let's say you hire a bunch of oil people. They're not necessarily all men. How do you get them to the rig? What is it? 100 miles offshore, 50 miles offshore, 25 miles offshore. How do you get them offshore? How do you get them to the rig? Canoe? Helicopter? Yeah. So is it possible if we go from 400 to 800, which versus the 1600 is still 50% decline, but suddenly there's going to be a need for a lot of helicopters, and the helicopter guys are going to do well, and they're going to need gasoline, and all these new workers, they're going to need food, and they're going to need this and that and the other thing, right? So you can see how the trickle down economics works well. So for example, you can watch the Baker Hughes rig count, and once it stabilizes, and by the way, this could drop as low as 200. Okay, so you could say maybe, but not quite yet. But once this stabilizes, be interesting if you could make an investment play on like the helicopter companies. Do you think there are vendor lists for the oil industry for using specific chopper companies? Like a preferred vendors list, and you can find out the top 2 or 3 helicopter companies for the Gulf of Mexico that work with these international oil companies. Oh, what? Oh, that, whoa. Because suddenly they could go from almost no revenue at all. You could just imagine there's probably a company somewhere in Louisiana that's got like 150 helicopters just sitting in a hangar somewhere, right? All of a sudden they're rolling these suckers out, dusting off the cobwebs and firing these bad boys up, right? So anyways, that might be an interesting thing. Whoa. Boy, it's nice to think ahead, right? They're going to need some maintenance, guys. They've been mothballed for a couple years. Mm-hmm. Those maintenance companies are probably going to go up too. Okay, so anyways, so there's an interesting thought process. If this number starts going up versus down, that's going to actually positively affect non-farm payrolls. Okay, and if this number is going down, it's going to be a drag on non-farm payrolls. If it's moving sideways, like 400, 400, 400, 400, 400 month after month, then there's no headwind, positive or negative, no tailwind either, and it'll just have no impact on non-farm payrolls. And you could think ahead faster than the analysts because apparently the analysts are not that smart. They they have PhDs, they analyze one industry all day, every day, but they can't calculate retail sales, even though it's their job. So you got to be smarter. That's it. I'm sorry. You just have to be smarter than everybody else. But guess what? You'll make a lot of money if you can be. Your call. Let's see if this is going to work. Hopefully I don't have to yell at the programmer. Please, 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 please. No. Hang on. This does some. Ba-ba-da, ba-ba-da, ba-ba-ba-ba, ba-ba-da, ba-ba-ba-ba, ba-ba-da, ba-ba-ba-ba-ba-ba-ba, ba-ba-ba-ba-ba-ba. That doesn't work. There we go. All right. All right. Hello. How are you? How's your mom? All right, we're here. So you want to do a little commitment of traders report? What we're looking at are reportable positions from large institutional investors that are required by the government to report their weekly holdings. Okay? So now you get big institutional investors say, we're holding all these trades. Let's say we're all long dollar. Well, they can't all be long dollar. Some are going to be short dollar. Okay? But what you look at is total volume, right? So let's just put total volume. Some are going to be long, some are going to be short. Why would a chunk of the market be long and yet another chunk of the market be short? Well, some are trying to speculate and make money. Cool. Some are trying to hedge. So you have to say, so the government goes in and says, hey, please tell us whether you're hedging or speculating. We'd appreciate it. It would help us discern the direction of the market. And then nobody wants to report their actual numbers. So then they say, okay, well, if we gave you lower taxes, if you told us you were a genuine hedger, would you report it? Boom! Guess what? Everyone reports. But you have to be a genuine hedger. Otherwise, you're a liar, cheater, and a thief, and you go to jail and bad things happen, right? So anyway, so now you got speculators and you got hedgers. Okay, so let's say this is 45% of the volume. This is 45% of the volume. Do we know the entire market now? We have all the speculators and all the hedgers. What's missing? %. So what's the 10%? No, we got speculator here. Yeah, us, dumb money. This is dumb money. Retail. The dum-dums. Okay. Boop. So now we have a complete picture. Okay. What we're looking at here, because you don't report your positions to the CFTC, do you? Dear CFTC, I am long 3 mini lots on the Aussie yen, and I'm too right. Yeah. So anyways, but you can extrapolate that information. Yeah, micro, right? Okay, so anyway, so you can extrapolate all of that. Okay, so that's how we know. So these are institutional investors that are buying or selling currencies for profit. They're not hedgers. You get it? And who speculates in foreign currencies for profit? IBM? Nabisco? Nestle? No, banks don't do it. They don't have prop firms anymore. They don't have proprietary trading desks. They're illegal. Hedge funds. You're like, what? Yeah, hedge funds are the ones in the market that are not hedging. Isn't that just blow your mind? You're like, well, I don't get it. Yeah, no, it's like calling a hedge fund is like a really bad name because hedge funds don't hedge, generally speaking. Now, they might do very complicated investments to maybe try to reduce some risk by, you know, buy some hedging techniques. Okay, let's say they do that, right? So they buy a stock, and then they do throw in some options, some puts, and some calls in a complicated thing of math, and then throw in some other thing. And the idea is, no matter what happens, they'll either make 5 cents a share or 8 cents a share, right? And it took 5 different trades in different markets with different asset classes to do it. Okay, but at the end of the day, were they hedging? They might have used some hedging techniques, but they are in it for profit. All right, they're profit. They're alternative investment vehicles. They're not hedgers. Okay, if you're a dog food company, you need to hedge the price of wheat and corn and chicken, and chicken lips in particular. Right? So that's what a hedger would do. Because if the cost of corn goes up 20% this year because there's a shortage of corn, which wouldn't shock me, dog food prices will still need to stay the same. So that therefore those dog food companies need to be long the futures market to offset those losses in cash. Okay? Nice, huh? All right, so let's go through this sucker. Pity the fool. Okay, this is euro. Price has generally been up for the last month or so, 2 or 3 months. Generally up, but represented by the red price. What is creating this? Well, these are the guys that are shorting. Okay? So total short volume has fallen, right? These are the number of contracts short. Trying to draw a nice look, right? So that gives us one picture. Are there more bears or less bears than 3 months ago? So just think of a pit, guys, a trading pit. Okay? Here's a trading pit like on an exchange. On one side, you're going to have all the traders that want to buy the currency. Well, in this case, the currency futures contract. And on the other side of the pit are going to be those that want to sell. The only thing that separates them is the price in which they want to buy or sell. So they scream back and forth, right? And then they make deals, right? So what we're trying to figure out here is, let's do this, draw the pit. Okay, there's the pit. How many bears are there? So let's say you say there were less bears. So what if the pit looks like this now? Now the next part of the question is, at that same time period, are there more or less bulls indicated by this gray line? Same. So it still looks like this. Oops. Okay. So who rules this market? So the Euro USD has steadily gone up since February, right? Steadily gone up, but have people been buying it? Isn't that interesting? That's one thing that's going to make you smarter than the average trader. You already know this idea. The price can go up, yet nobody's buying it. Isn't that funny? Oh, gee whiz, it's getting bright in here. It's getting bright in here. So take off all your clothes. All right, hang on. Talk amongst yourselves. All right. That you need somebody, someone. Oh. Best thing about getting a new chair is the whole office smells like leather. Smells like a Porsche 911 right off the assembly line. Oh yeah, by the way, I found Porsche Designs actually will sell you an office chair made from a Porsche 911 chair. But I'm like, $7,000, a little higher than I wanted to spend. I can get 7 chairs for that price. Are there short and long positions on their relative or absolute? Well, okay, let's talk about that. Since they're reported, you know how many are long and how many are short. So this many are long, and then this many are short. So it's almost neutral. So the black line is longs minus shorts, and the market is almost neutral. There are slightly more bears than bulls, but because this is the water line, you see 0? But you're also, okay, look at this. You see this extreme here? The market was extremely bearish at the end of November, beginning of December. What changed in December to make the market go heavily net short to neutral? No, Andrew, don't worry. That's why I'm here. If you already knew this, then I should just be trading on my own. I don't, I already know it. So if you already know it, then there's no point in over this. We'll just compete against each other in the open market. Yeah, interest rate hike, right? No, Nick, interest rates were risen. Right? Right here, interest rates went up. Right there. Okay. Cool, huh? Okay, and more importantly, what we found out is that later on, like in here, what did we find out a month later in this period? Well, what we're looking at, Alan, is open interest. How many are long? How many short? So look, we started with this hypothesis that you're asked to go on CNBC, let's say, and they're like, hey, man, you're the foreign exchange expert. So what's going on with the dollar? And you say, well, relative to the euro, the market's actually neutral. So you see a lot of strength in the euro USD lately. And really what it is the net shorts are coming off. We went from an extreme high in net short positions on euro back in, the beginning of December, and all those short positions have come off. But what our analysis shows, based on the CFTC's Commitment of Traders report, is that no one is actually buying those euros, and now the market is near net short. So something should happen in the next few months, whether it's the bulls or bears, only time will tell. Boom! Oh, you just killed it. Right? So this is what we're learning, right? How many are long and how many are short? And then what's the difference? So here, everybody was short. Hardly anybody was long. Okay? Cool, huh? So it's these extremes that also are important. Okay? What happened when we were way down here? What is this, 170,000 contracts short, I'm guessing? Maybe it'll actually tell me a number. 165,512 are net short. That's longs minus shorts. Okay. 165,512 euro futures contracts on the Chicago Board of Trade, is it? Or is it in New York? NYMEX. I don't know, whatever. On the exchange, right? Are net short. So it's very particular. It's not the whole world. It's the futures exchange in the United States, okay? What happened to those euro contracts after hitting 165,000 net short? What happened? Follow the vertical line up to the yellow line. What happened in the weeks after hitting the 165,000 net short? Here's the extreme. 165,000. What happened? Doop, 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 doop. These are weekly changes, guys. What happened? Did I lose my microphone? Did you guys freeze? Yeah? No? What's going on? Reduced. Otherwise known as the market was oversold. Okay? So you want to be a genius, you could say, I like to look for the euro to be at extreme overbought and oversold conditions. And in particular, I like to look for the euro to approach 150 to 165,000 contracts net short. And then at those extreme levels, I look for profit taking on the euro shorts. So there's I look for short squeeze, right? Isn't that like, well, you could say, well, Wayne, come on, that's hindsight. Okay, look, boom. All right, hindsight. Fine. Guilty. What are you going to do if that happens again in the future? Won't be this week or next week. Might be next year. What are you going to do? Maybe you should write it down. Dear Wayne, I'm writing a message to myself. If you find the euro futures contract, as indicated by the Commodities Futures Trading Commission's Commitment of Traders report, somewhere between 150 to 165,000 futures contracts net short, please look for profit taking and short squeeze retracements in the Euro USD. Thank you very much. Signed, yours truly. May the pips be with you, Wayne McDonell. Okay. Hello, filthy, stinking rich. This is where now you got to get the champagne and pour it in your hot tub. You're like, whoop, 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 whoop. Yeah, champagne in the hot tub. Now you're a currency trader. Now you got it. And then, of course, you have your little kid floating in there with his little floaty armbands. Daddy, why are you pouring champagne in the hot tub? Shut up. All right. So there's your euro. Did you just pee in my champagne hot tub? Yeah. All right. So we got our pig dog. What's the first thing you're looking at? Did that switch or not? It's not updating? What? Let's see. Am I getting a pop-up window somewhere? Sometimes I get error messages that pop up on like one of 18 screens, and you're like, you can never. So it's not updating. Might have to call. Oh, we're out of time anyways. Let's see. If I can fix this bad boy, I will. You're not the only one. Okay, that looks exactly the same as the euro. All right, the app's not working right. Yeah, all right, so we'll have to figure it out. So anyways, it's been an hour, so might as well pop this up on the website for its all its glory. Thank you for being on my team, and thank you for all your efforts. And this is a tough gig, so thank you for being strong. I'll be here tomorrow and the next day 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 and the next day. I do take weekends off though. So peace on earth. May the pips be with you. May your profits be above average. And I'll see you tomorrow. Thank you to all the analysts that are posting their ideas on Forex.Today. There is an update to the site, and it's a little bit buggy, but we're working on all the different changes. It was a difficult transition, but I'll show you some of the differences if you want. Okay, when you click on a post, it dynamically loads, and okay, this is Andrew's post. Very nice, looks good, Andrew. Oh, could use some tags though. Okay, now check this out. You could follow Andrew. Okay, and you can obviously share the post as well. And leaving comments is nice. Okay, isn't that nice? And now, based on the old site, you couldn't see comments unless you expanded them. Now you can see member comments and stuff. So thank you for the comment. So there's little things like that that make it very easy to get updated. So if you if you find that one of the analysts just writes well and you just really enjoy their analysis, you can go ahead and follow them, and you'll be updated when they make a new post. Isn't that nice? So eventually what will happen is, you can even, you can customize the Forex.Today site so that you only get updated on, by the analysts that you like to follow. We're also making some organizational changes. So like, let's say you're only interested in analysis based on the euro, that'll bring it up. The other thing you might want to check out is you can go to activity and you can leave your thoughts here, your personal thoughts. If you're not an analyst, but you got a great trading idea you would like to share with the community, you do it here. You can type in your text. Hi guys, I'm in the webinar. I will give an example of leaving a trade idea. This is just a test, okay? And then watch this. You can add a video or you can add an image. Okay, I got to get this off the here because I have all the secret. All right, hang on. So what I'm doing is I'm just entering an image here. It's uploading. There it is, guys. Hi, guy. Hey, that's there. It's for Guy. Okay, and then you can look at it and oh snap! Is that beautiful? Don't turn your back on me. I won't be ignored. And I didn't post that as an analyst. I posted that simply as a logged in member. So all you have to do is be a registered member and you can share your ideas and people can leave comments. Does anyone want to leave a comment? Just as a test? Anybody? I'm not the only one. I'm not the only one. No comments yet? Yeah, well, first of all, there's a lot of people on the site. Second of all, we are doing a bunch of things in the background as we complete the transfer and the update and the migrations and a lot of things going on the server. Let me know if you've left a comment. Yep. Done. Okay. So it's kind of like a Facebook timeline. So feel free to contribute to the community now. We also, does anyone use forums? Well, it looks like Jim did it too. So by the way, I'm getting emails. Jim has commented, Warren has commented. Okay. 30 seconds ago. So yeah, there's a slight delay, but probably because everyone's doing stuff. So if I refresh again, there's going to be one from Warren. And so now you can actually, communicate, if you will, and discuss trading ideas with each other. And if you leave a comment, you'll be updated. So you see in the top right-hand corner. Okay, now it's refreshing. You see in the when this refreshes, there's Warren. Okay, you see here, everyone has this now. Okay, I'm being updated about notifications that people are sending me messages. Okay, so that's a very nice new feature as well. Lots of cool things going on. And if you do use forums, we've included a forum. There isn't any topics yet, so we could use your help in finding out what you want to discuss. But it's a nice forum if you want to help us build those topics. It'd be appreciated because all these new features are here for your benefit. It's your community. Please be a leader. So there's a tiny little tour. There's lots of new things on here that make giant improvements. Okay. And if you do sign up with Facebook, we don't post to your post or anything like that. But what it'll do is automatically pull your profile picture. Okay. So that's really nice. So anyways, peace on earth. May the pips be with you. May your profits be above average. And we'll see you again soon. In fact, tomorrow. Cheers.